Good afternoon, everybody, and welcome to another edition of Chart Watch Live. My name is Capolingua. I'm from Market Index and Livewire Markets, and it is a pleasure to be joining with you Wednesday lunchtime to talk markets. What an amazing week it's been. Some good things, some terrible things if you're invested in gold and silver stocks, but they're steadying now. That is definitely going to be a major topic of conversation today. We want to have a look at the gold chart, the silver chart, perhaps even some of those other precious metals. I want to determine how the short and long-term trends are looking. Is the price action suggesting that those major trends are over, or is it just the end of the beginning, as they say, not the beginning of the end? Of course, we need to do our portfolio management model to determine overall roughly where I am setting my portfolio management. You can do whatever you want, of course, and I should say that throughout the presentation. And then we'll get to your requests, and I want to keep moving. Because we'll get to the end where I'll tell you how to get my trend ribbons. Now, let us head over to the Amy Broker screen, and we are going to talk about our portfolio management model, which very quickly head over to the Nasdaq, determines overall how much portfolio risk we can have. Why is this important? People are like, I want to talk about my gold stocks, my favorite gold stocks. What are they doing? Let me just very quickly tell you why this is important. Let's go back to whatever this one, what doesn't matter, 2022. And what we can see here is that everything's going gangbusters, right? So I know I'm summarizing, let's call it FRP. FRP stands for full risk position. While we've got double greens, price action is good. We're going to get to a point somewhere around here, though, as you know, if you follow my regular commentary in the evening wrap on Market Index, where I'm going to start to say things like, hey, everybody, not so sure about this trend. Let's go to let's go to 2/3 risk position. 2/3 risk position means by default, I'm moving to a 33% cash position, which sounds incredibly conservative, but it's because I know that when this starts to turn, it can be quite devastating. We could get as low as 1/3 invested, 2/3 cash position, and this model will keep us in that maximum cash setting as long as possible. Now, you might be wondering, why don't I ever go to zero risk position, ZRP, on my portfolio management, which means I couldn't invest anything. I have to put it all in cash. I just don't believe it. I don't believe that's the case. I think in the best downtrends, we're still going to find those few stocks which are absolutely shooting the lights out, and we need to have risk position to be able to take advantage of those. Plus, we also want to have some shorts, and they come under that banner of risk position as well. So we look at how this model works. Just assume, while that's pink, we're still very, very conservatively positioned, and then only around here we start to move our money back into the market and buy around here. And you go check the tapes. Literally, I would have been reporting on you for these things around then, going back to a more invested state. Now, I'll just show you one more. That was only a small dip in 2022. There's the COVID one, and this is the importance of this, ladies and gentlemen, because I know many of you listening today were around and investing during the big one, and that is what happened in the GFC. And you can see how uncertain times were, and yes, we might have moved back to a more invested position at times, so we never would have gone fully invested through here, and would have stayed in cash for much of that 57% decline. Certainly it was in Australia anyway. So going back to here, what are we seeing now? Now we've got some context. Well, I'm currently at a 2/3 risk position, which means I'm not fully invested. I've got 33% cash. Now, your average balance fund only has between 5 and 10% cash, and if you're investing in passive index funds, which Mr. Buffett said was a good idea, you are fully invested, right? So quite aggressive, I would say, even at 2/3 on my cash allocation. But that's where I am. I don't think I need to be anywhere else. I don't think I need to be moving anytime soon. I have mentioned in that evening wrap that if we close beneath that point of demand there, or really it's more of a zone of demand, 22,692 to 916, that I would be moving back to half risk position. Not great candle last night. In fact, what we're also seeing is some volatility creeping in. So not great candles, not great candles with extra volatility. That's disturbing. We're getting our volatility down here. This is my optimized true range. And you can find it on your trading platform, probably just as ATR. And I use an ATR of 1 period, and then I just run a longer term moving average over it. I just want to see what's above and what's below average volatility. And we tend to find that major peaks, well, there's a major trough there, and major troughs, not always, but often are punctuated by substantially above average volume and volatility. This is a volume here. That's just the regular volume that you have. Don't worry about the one down the bottom. We might talk about that later, but these are the important ones that are very easy to obtain in your charting platforms. So when we have the price action, the volatility and the volume, we're going to get a little bit more concerned than if we just had one of those components. So it's sort of a weight of evidence approach, as it were. Last night wasn't a total write-off. You can see that downward pointing shadow. It means there's still a little bit of buy the dip coming in. There was plenty of buy the dip here, but that buy the dip seems to be losing, I guess, its motivation. Okay, I think I'm in the right place at 2/3. I think I'm well placed, or that I understand well where I'm going to change my risk. And that is half the battle, isn't it? Understanding what to do and when to do it. The when is the equal part of the equation. Why are we looking at the Nasdaq composite in the US? What's that got to do with you and your portfolio of BHP, Rio, a few banks and a few insurance companies? Look, we all know that what happens in the US doesn't always stay in the US. Thank you, Mr. Trump. That tends to come over to local shores and bother us a bit. And certainly some of those events, because this is when Trump was talking about sanctioning Europe for its disagreement with him over Greenland. Was it that one or was it that one? I can't remember. Well, this is the Wash appointment. Either way, these are very much US-centric things that have come to unfortunately derail what was a pretty decent-looking short-term uptrend in a still well-established long-term uptrend over here in Australia. And we cannot ignore what's happening in the rest of the world. A couple of big days down there again on the commodities meltdown. I'm going to go into some of those charts very soon. A decent rally yesterday, but you can see, much like the buy the dippers were still there on the Nasdaq, the sell the ralliers are still here. Right? They're still just pestering us on the ASX 200. You can see this upward pointing shadow here and a feature over here as well. And we have really changed, I think, the mood of this buy the dip through this phase into, oh gosh, I hope not sell the rally. The old tin pot, ladies and gentlemen. What can we do with an old tin pot? I don't think I know that I was 2/3 RP heading back up here because it was looking very good. And trend following is a reactionary pursuit. And then we've moved back after that candle there. Not necessarily straight to 1/2. I used words like a natural attrition within the portfolio. So it's things that on their own right, throwing off bad price action or candles that I don't like. Just, obviously pruning those as I require, but also not adding new risk to respect the fact that I do eventually want to get to 1/2. But certainly no rush to get there, and reiterated that. So we're sort of in this limbo land, aren't we, between naturally between 2/3 and half, because you don't get there overnight. But elevated, I think, risk at this point in time, but we still want some money at work. So this frames now when we go to individual stock positions, how much risk we can take on and how aggressive we can be, also with certain types of setups. What I want to do before we get to that point is head over to what happens to be TradingView, and if you do have a TradingView account, I can share with you absolutely for free in definite access my trend ribbons, and you can play along at home, as it were. I wanted to start over here with silver, which is of course the topic. Now, if you rewind back to last Wednesday when we had our last chat, I said something along the lines of, look, I couldn't see, and I can't see what I can't see. So if you think that Carl's going to pop up on a Wednesday and give you all the answers you need, unfortunately, I can only tell you what I can see, and I can say, look, I think this is going to happen more often than not, but I can't say this is going to happen. And we're looking at a picture like that, and we didn't have the next candle fully formed yet. It only just started. And I said something along the lines of, look, this is not a great price action signal, but it's not a death knell either. Like blending those two candles together, we talked about this after session last week, didn't we? You're still getting a pretty bearish candle, but it's not a species-ending event, as I like to call them. We might see some of those. In fact, we will see one very soon, a species-ending event. Keep that thought in mind. It wasn't the big killer, but I did say words to this effect. But we are seeing substantial volatility, and this is, I want to move from a point where I'm saying, well, I think there's a lot of volatility around, or I think there's a lot of volume around, to being able to definitively say there is a lot of volatility around, and there is a lot of volume around, and we're starting to see signs here in the price action of money moving in a big way, but where in the past it wasn't being met so aggressively by supply, it is now beginning to be met by supply. Why is that supplying? Maybe it's at a price where they think, well, that's the end of this cycle. I don't know. Also, the money coming in is probably more speculative in nature, rushing in the Johnny and Jenny come latelys, as it were. I mean, that's what I had to look at, and it turns out that candle, I mean, that's a pretty decent giveaway as well. Not necessarily the species in event, but certainly that we've got significantly more indecision. You can see the ranges. Certainly the volatility is very high and volume still high. And what does a species ending event look like? That's the species ending event, ladies and gentlemen. So no, I certainly didn't predict that we would see something of that magnitude. It was beyond what I was able to predict based upon the evidence I had. But certainly there were some warning signs there that I did bring to your attention. Now this unfortunately, as it was for the dinosaurs and the meteor, very, very long black candles like that. It was something like 33%. Generally, overall, over 10% in a pullback is usually not a very good sign. But when you're getting into the 30s, and there was a little bit of a bounce there, but not enough for me. We're close to species ending. So species ending means very high probability. Now I can never call anything with any certainty because that's just not how good trading and good trend following works. We are trend followers, not prognosticators. Prognosticating is useless, ladies and gentlemen, because the future is unknown. But there is, I believe, a more often than not chance, based upon my substantial experience on these matters, and I've been watching cycles begin, extend, and end for over 30 years now, so I've seen a few. There's a very good chance that is the end of this cycle. But Carl, I hear you saying, let me tell you about silver and its incredible fundamentals. Ladies and gentlemen, those are narratives. Those are just words that people put together in the right order to convince other people that their view is right. At the end of the day, all of those narratives are jumbled up, put together, and they create demand, they create supply, and they end up in our charts, where we get to make a decision based upon probability. And I will just go to here, and the charts are going to look the same, but the periodicity is different. But I want to head over to that's I've just changed to a weekly chart. In fact, when we go to a monthly chart, and I'll get back there faster. But this is 2011. Now, don't worry so much about the fact that the periodicities are different. Candles are candles. It's irrelevant what the periodicity is. They're telling you what demand and supply are doing, how they're interacting, and who's winning the battle. Now, neither of these are species-ending events because of the downward shadow here, and that one's very much closer. But putting them together, I think we can see that we are not in this phase anymore, where we are unsure of what the possibilities are. Okay, and certainly if we go back to here, to the present, look at that. Oh my gosh, ladies and gentlemen, you hear me talk about upward pointing shadows. I haven't seen that particular chart or that shadow, but a few people now, I'm sure, getting goosebumps like I am because they know what that means now. You've been hanging around with me long enough to know what that means. But on the way up, you've got to think about the psychology of such a rally. The narratives abound. Of course, people are convinced by these narratives. And what we don't have is a high price here. Anything's possible. So right here, $100 is possible. $100, $100, $100. Right here, $200 is possible. $1,000 is possible. Anything's possible. Today, we're less certain about what's possible. We're probably factoring out 1,000. Maybe we're factoring out everything down to 200. But for many people, and that candle doesn't look bad, but it's still going. It's not finished month yet. For a lot of people, they know what's possible. Okay, and once that psychology is entrenched of what's possible, probable, that high is in, it gets a lot harder to come back. So I'm not saying this will happen this time. I'm just saying that happened last time. And if we go to the time before that, that was 2011, we might have to go back to 2006. Here is 2006. Now that's certainly, no, that's 1980. There was one in 2006 that I've skimmed past, but it is, oh, there it is there. Oh, that one took a while. There's 2006, then there's 2008. And then there's 2011. So there's a few. And then the big one is where I want to get to, and that's potentially more like today with that species ending event. So it's very hard for these to come back once the psychology has shifted from anything's possible to, okay, we know what's possible now. And the other point is what these moves do, and we don't have volume all that way back, but we certainly have volume now. What these moves do is they drag in a lot of Johnny and Jenny come latelys who are stuck in at these higher prices. And on the way up, of course, they're reluctant to buy. I can't buy now, 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 I can't take it. This thing's going up forever, and I'm going to buy now. All right? I knew I shouldn't have bought. Please, God, if you just let silver go back up to $120 an ounce, I promise I'll get out. Please let me break even. I'll get out and I'll never trade silver again, I promise. What it does is it creates this latent supply in the market. It's supply that's not there now. It's not there now because these people don't want to get out at 90, right? They're losing too much money. They want to get out here or here or here or here or wherever they got in. So demand shifts because we know what's possible. We're less likely to demand now, and supply has shifted as well. Just be careful. That's all I'm saying. Just be careful. And now what could prove me wrong? And this is a great little segue. What could prove me wrong is I don't know what's going to happen next. Who's to say that just because most of the time I've seen moves like this, it tended to be the top, that it has to be the top? The market will tell us. And if it is not the top, we will come back. We'll come back strong. There will be buy the dip. There will be positional buying because, let's face it, the positional buying, the big funds didn't buy this last bit. They know not to buy that last bit. All they wanted to do in that last bit was to sell. But they might put some money to work down here once all the margin calls have been executed. Okay, they want that cheap supply. If there's legs in it, we'll get back up to those highs, and we won't get back up to those highs with long upward pointing shadows. We'll get up to those highs with strong candles closing near those highs. So there is hope here in the gold chart. It's less evident in the silver chart. I think we can see, I think more damage has been done there. And this is it's just an instant comparison. You can see where there is more legs, I guess, to this in gold, certainly, than silver. But this candle is still, and we must discount it. Okay, that's the other thing. But all I'm doing, ladies and gentlemen, is giving you the tools to be able to do this analysis when I'm not around. Graham from South Africa. Welcome, Graham, tuning in from South Africa. And I'm going to say, Graham, that I'm not going to have much to get excited about on this one because much as I alluded to in my introduction, I want to see some strong trends, hey, in either direction. I'm happy to go long if I've got double greens going up, and I'm happy to go short if I've got double reds going down. And we really are Mr. In-Between here on Vulcan. So I'm going to spend only a little bit of time on this. And Graham might be saying, hey, Carl, why don't you tell everybody about the incredible operations they've got going over there in Europe? They're going to take salty water coming out of a mountain in the middle of Germany. They're going to treat it with the most amazing energy from the sunshine. It's energy from geothermal. It's beautiful. It's clean. We're going to make lithium. We're going to power the energy transition for the next 100 years in Europe, Carl. Why don't you tell people about that? And I'd say, Graham, look, I'm not going to tell people about that because I really couldn't care any less about it. Like, you know, there's care, there's nonchalant, there's completely oblivious, and somewhere about 34 layers down is where I'm sitting about what Vulcan's actually doing. Because my belief is that everybody who cares about that stuff is trading Vulcan stock, and if it's any good, they'll be falling over themselves to buy it. There'll be just hype, hysteria. Let me into Vulcan because it's about to solve this energy transition problem in Europe. It doesn't seem to be the case. Not only would everybody be trying to get their cash in because, you know, otherwise cash is burning a hole in your pocket, let's get it into Vulcan. The people who have Vulcan shares, they're not exactly that confident either. They're not saying, hey, I better hang on to these Vulcan shares. They're going, you know what, I better get out of these Vulcan shares because there's about a zillion other things I can do with my money. Maybe I'm going to go buy the dip and silver. And that's the psychology behind me not spending a lot of time on this. In short, that's heading in the wrong direction for me to buy it. It's getting close to me wanting to sell it though, or short sell it because I wouldn't own it. So I can't own this, you know that. So therefore there's no point in me saying I'm going to sell it. And certainly we're very flat on here. The other thing we're going to do then is obviously if we were doing this, it was in a scan list, we had plenty of stocks to get through, we wouldn't spend any more time than going pink, orange and moving on, right? But because Graham's asked me about it and because he's asking from a long way away, I'm going to do the price action on this one, which is falling peaks and falling troughs. And that means when we are rallying, right, we are not getting as high as last time. And for me, it indicates, now I don't know for sure because I can't go and survey everybody who's supplied, but it indicates growing supply to me. Because let's face it, if there was a growing supply, that point of supply there, POS, would be higher than this one, wouldn't it? But it's lower. So we're rallying, we're buying the dip, but we're just not getting as far on that buy the dip because we're encountering, I feel, increasing supply in the market. And then we're coming down. It's a very nervous time. It's a very nervous time as we're coming down. Will they buy the dip? Will they buy the dip? Did they buy the dip? No, they didn't buy the dip. So, there's also a pretty good chance that we've got diminishing demand when the price action looks as it does there. I think the other dead giveaway, ladies and gentlemen, hopefully this is, if not for the ribbons being the first thing you noticed, hopefully, if you've been following me for any length of time, the second thing you noticed is just a wall of black. Just a wall of black. There's one white candle in about the last 30. And what that tells me is there are pervasive sell orders. So, algorithmic sell orders. There's a big seller working in the market. They can't sell everything all on one day. That's just silly. There's too much to sell. So they break it up into small bits and the computer just drips stock into the market. So even on days where there's a reason to buy, maybe the price of lithium is up, those sellers are just dripping. And they're just too big. So for me, there's little evidence to suggest that the demand side is in control. Therefore, there's little need for me to pursue this one. I must remember at the end to get to the point, because we've got this overriding concept of analyze, okay, accept, and then act. Okay, and each one is as important as the other. We've done the analysis. Okay, the acceptance is the hardest part, because perhaps like Graham, and I shouldn't speak on Graham's behalf, perhaps like Graham, he thinks this is a great story. And yet what the market's view is at odds with our view. So for me, accept is kind of the hardest part in that whole thing. It's easy to analyse. We just looked at a few candles and a few trend ribbons. The act part, I think, is easy if we do the accept part. The accept part is, look, the market's view is different from mine. The more often than not here is at best sideways. If you looked at 100 of these charts, and this is a really important sort of psychological point to get to. If you looked at this chart 100 times, in your experience, what happens next? Does it go vroom? Does it do that 75 times out of 100? Or does it do this 75 times out of 100? Or does it do this 30 times out of 100? What are the probabilities associated with this? Is it Vulcan going straight back up? Because then I should be buying. If that's the case, if it is scenario 1, scenario 2, which is sideways, or scenario 3, which is down, where are the probabilities? Let's say, this is not impossible, ladies and gentlemen, let's say this happens 20% of the time. Let's say this happens 60% of the time. I'm just using random numbers here, but hopefully you agree I'm probably pretty close. And let's say this happens 20% of the time. This is the concept of more often than not, and this is the power of more often than not, and this is the power of getting to this step so you can get to this step. If this is the case, what should we do with our money? Because we've got three options, don't we? We can either, if we think that is actually the highest probability, we can add risk. We can also reduce our risk, right? If this was 60%, then we'd be adding risk. It's not, right? So let's say, I don't think I wasted my time there. Let's say that one's off the table for me, okay? This seems to happen more often than not, so should I hang on? Well, for me, that's not an option, because I don't want something that's going to go sideways 60% of the time. I can't afford to. I've only got so many days left in my life, and I want to do something wonderful with my life, and hopefully having more money can help me facilitate that. I don't have a lot of time, okay? And when you get this many grey hairs, you start to realise how little time you've got left, ladies and gentlemen. So I don't want stuff that's going sideways. So it kind of leaves me one option here, which is the minus R. If I had it, obviously minus R means reducing the risk I have. Now, the other one is, I'm not going to go short this one, am I? I need that to be 60% to go short, and we'll see those as we go along. I think when I just saw this random little, because I don't know if you realise you guys are over that way. Your thumbs up emojis are down there. And when I saw, I don't have a lot of time left, I saw one thumbs up emoji go up the screen. So I think there's somebody roughly of my vintage that is realizing also, yeah, we better get on. We better get on with the webinar, and we better get on with what we're doing in the markets as well. Let us go to Harry. This is the second and final offline request. He's got PSC, and important, ladies and gentlemen, we go back to our default zoom, isn't it? Always go back to default zoom between charts, because if you're looking at, what was the other one, VUL? If you're looking at VUL, I did all my analysis and I checked out my candles and all that, and then you go to PSC, you're not really getting the true picture here. Okay, so we must go back to our default zoom. And I said last week I would check it on, it's 180 candlesticks on the chart. And that's the same whether I'd be using a daily or a weekly or a monthly chart, 180. It just gives me that right mix of detail and perspective. Okay, I think this looks amazing, Harry. Now, I don't know where it's going next. And we could, why not? I think it's a really neat framework. In your experience, ladies and gentlemen, charts that look like this, what do they tend to do? Okay, now it is absolutely possible that happens, but in my experience, that's probably more like the 20% now. This is probably more like the 20%, and I'm just making very round numbers up. For me, that's probably more like the 60% because it doesn't look all that different from this day here, does it, to be fair, or really on this day here. Now, it is possible these other things happen. So I think we could do analyse, except act pretty quickly here. For me, the probability lies with plus R. Let me turn caps lock on. Plus R, I could equals R as well if I had enough of it. So if I didn't want to invest any more in this one because I want to get some money into some other things, that's fine. Or already, I'm guessing this is a gold stock. If I had already had 10 gold stocks, should I really add this 11th gold stock? So maybe, or should I add more to this 11th gold stock? Let's say I've got it, then equals R. I'm trying to explain why equals R is a prospect here. Plus R equals R. What about minus R? I mean, if you've got a stock that's looking that good, should you be taking profit? Hey, we talked about the hardest thing is the what and the when. I reckon put a square next to that is when to take profit. I mean, when to take loss, that's pretty self-evident, but I reckon figure out when to take profit's harder than taking a loss. Because we don't want to let that profit disappear, do we? I mean, that's the biggest insult. So for me, I've only got one option. I think that's neat. Getting to the point where I've only got one option, I have to keep what I've got or consider adding risk to it, and that's where I am. Do you really need the summary as to why? Well, first pass would be that. Would I skip past this one? I skip past Vulcan in a second when I'm doing my scan. Remember on TradingView, you've got my ribbons now. You can just create a watch list and tap, 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 and the ribbons will be there in any chart. It's amazing. Vulcan, I just skip past in a second. This one, I know I need to spend more time on. But I don't want you to do all the price action and all the candles straight away, okay? Just write it down. Jot it down on a list, and we'll come back to it later. We want to get to the end of the list because as you're going down, like when you start at A, everything looks good. B, things are still looking good. But by the time you get to P, you should know actually, this is a really good one today. You'll find that you'll shortlist a lot less as you go down, but we only want to do the extra work on the shortest list possible. That's the point. Otherwise, it'll take too long to get through a big list, and we want our list to be as big as possible. So once we've gotten to the short list, and maybe we've run another eye over it, where we're starting to just incorporate visually some of these aspects of price action and even down here, volume, volatility. Some of these extra detail can come in on the smaller list, and we can add detail as we get smaller and smaller. But once let's say we shortlisted this at the end, and this is a very strong prospect for me based upon what I can see. Keep in mind, this isn't a candle, a live candle. This is today's candle. This can change. What if this ended up, it's looking great today, what if this ended up with an almighty upward pointing shadow? To say that, no, this point of supply was reinforced. If you go buy this now, you're getting in before the final suppliers had its say on the day. And I don't like to do that. I need to wait till the end of the day. I don't mind trading the last 10 minutes, 15 minutes, not more than that. I want to be pretty sure that the close I'm seeing is the close I'm going to get. Okay, so that would be one caveat for everything I've talked about adding risk. If you've already, Carl, sorry mate, I just got onto ComSec and I just bought it. Oh, oops. No, thumbs up emoji for somebody who just did that. For me, I have to wait to the end of the candle. Very important. Okay, so now we can go to the finer detail, and this is just an exercise in habit, isn't it? Doing what we must do, and that is checking our price action. And we've talked about the ideal price action in the past, and it really is this. We really want to see nice separation between those troughs and the previous peaks. That's just another way of saying these long motive face and shallow pullbacks. This is FOMO, ladies and gentlemen. Right here, you tell me if you disagree. This is people FOMOing into the market. This is people holding on, right, for upside. It's FOMO and HOFU. Here, we've got a little bit of supply coming into the market, a little bit of doubt coming into the market, right? People aren't sure. But what happens? Okay. HOFU kicks back in. No, we're holding on for upside. Okay. We've got buy the dip. We've got accumulation right? The fund managers, they won't participate in this last bit when people are going crazy. People like us are going crazy for it. They won't participate in that. They might even sell a few to precipitate. No, they wouldn't do this to us, would they? Because don't forget, they're in down here, or they're in down here. They're in, like, if they sell a few when they feel the market's getting a bit hot, why not catch in some of that hot money? Because they know it's day trader money. They know it's short-term money. Why not catch some of them out? Take some profit. Like, amazing. They can't lose. So far, they take some profit. They lose a bit of stock, right? Let's say they want to buy 1 million, right? And they've got 500,000. Why can't they sell an order of magnitude 100,000 up here just to knock a little top out, get all that hot money stopping out, liquidated, and then buy back that and keep going to their 1 million shares? This, ladies and gentlemen, is how trends, this is why they exist, but this is how they extend. And if you think you can get, this sort of price action, it's telling you that the big funds who are buying, they are very, very strong. I wouldn't say the opposite, but an alternative to that is you've seen this, and you've probably got stocks that do this, like they're going up, but they're crazy, right? For me, this is more of a trading market. There's probably more volume, more volatility, but there are probably more traders here than funds that are really in control of this one. Okay, so I think there's less consensus here, and this is this is the very, very strong consensus. Now I know I've misspelled that. Consensus. Okay, let me fix it up just in case my kids watch this afterwards. Better do the right thing. A very strong consensus, and that's what we want, because both sides of the market agree. The demand side, they think it's great, and the supply side, they think it's great. Here, hey, a lot of people think it's great, but quite a few people don't think it's great either. So where would we rather be? We'd rather be on the right than the left, and that's what we're seeing here. And I know I'm talking about Prospect Resources, and I know another dozen of you just went off and bought it already on your trading platforms, right? But for me, I have to wait for the end of the candle. And in the candle with a nice volume push, we're getting that here because there is supply. So it's not all one-way traffic. We did have a decent supply side push here. Now, it did coincide with some nasty things going on with markets, and that actually makes me feel better about it. So if I can kind of understand why some supply came into the market, because I don't want supply. I want people just to hold on forever. I kind of get why there's some supply, and then this is a good comeback today. We know there's supply now in the market, and the only way to get rid of them is to trade with them. And that means volume, right? So if there's lots of demand coming in, we need to trade with that lots of supply. We're going to see it in the volume. Volatility here, and it's a good thing, but just watch out. There's a little bit of an upper shadow. I don't know if you saw there appeared, and we don't want that to grow any bigger than that. So an interesting trade. If I was to give this a score out of 10, as I said, high 8s, even 9 out of 10. The only thing that I don't like, and this I can't say because I haven't got my final shortlist, have I? But I do this for you, ladies and gentlemen. Let me quickly remind you how I do this for you every day. So, Carl, mate, this is too hard. Can't you just get AI to do the scan for me and just tell me what to buy? I've got something better than AI. I've got CI, which is Carl's Intelligence. And it happens every day in ChartWatch ASIC scans on the market index site for free. Any person can just walk up, click on that, and I did all that work. I scanned every stock in the ASX, not just the ASX 200. My algorithm, and I've got the software that does it, looks at every stock on the ASX, and then I shortlist it, and then I shortlist again, and then I shortlist again, and I do all that work. And this is what I came up with for the ones that I like. And then these are the feature ones, and I put some charts in. How about that? What is that one doing in there? What's going on? That doesn't belong in there. Okay, typo, got to fix that one up. Is that interesting? Let's say I put that in today to make sure you're paying attention, because that one is not supposed to be with these ones. Anyway, that's hilarious. And then I do ones for the downtrends as well. So you might look at something like Aussie Broadband, look, is that a plus R, equals R, minus R? Well, these are the minus Rs, ladies and gentlemen. And some of these have been minus Rs for ages. Look at that one. That's a big minus R there. So, it works both ways. And like I said, you can do the work for yourself, and I encourage you to do it. This is the thing, because what we just saw in ChartWatch scans is me giving you the fish. These webinars about me teaching you how to fish. I think that's so much more valuable. Okay, I had a couple of offline ones here, and I'm just going to mention them to say I think I've explained it. I've explained the case. So let's go to one that said, I want to know more about your trading process. Okay. I can't remember who it was, but whoever that was, I think I've explained my trading process pretty well. Okay. And then there was somebody, TK from YouTube, says, do you keep, how long do you keep buying for? Like, you know, I mean, you can see using my model, the first plus R is probably down there. I mean, we have to go back and see what it looked like. Look, that's not bad. I don't think that's definitive. Maybe that one, certainly that one. So let's go without a doubt. That's the first plus R. And there are other plus R's in there. I mean, this is a plus R here. This is a nice candle. It's continuing the trend. Everything else is in place. This is certainly a plus R here. And then there's nothing really until this one. And let's assume that that's going to, candle's going to close the way it is. So how long do you keep going? And I do have a rule, and remember, this is all about you do what you need to do, and I'm just giving you ideas about what I do. But you know, I tend to have a limit on how much each trade can have, because I don't want one to become too big relative to the other trades. And also it does, in some ways, prevent me from getting in later and later in trends, but I don't mind that. And this person said, you know, there are other traders out there, Mark Minervini, William O'Neill, who aim for a risk-reward outcome of 1 to 3 or 3 to 1, I think he meant. And for me, I don't need 3 to 1 because I'm a trend follower, and I'm also, perhaps unlike those people, somebody who believes that I don't know the future and anything's possible. And therefore, I don't set myself to these things. I need a minimum of 1 to 1, because if I'm not getting at least what I stand to risk, then why would I do the trade? But I think 2 to 1s, 3 to 1s, they're silly, because what you're doing is you're predicting. You're saying this thing only has the potential to do X or Y. And I think that's very foolish, because you're saying I'm smarter than the market. I say at least 1 to 1, because that's a very general basic minimum requirement. And after that, let's see what happens. I'm a trend follower. I'll follow it as long as it needs to go. So yes, I have a limit, because I don't want the trade to get too big. In some ways, that limit prevents me from adding at certain points beyond that. Potentially the trend might be really extending. Some people get worried when the trend, when the price is really far away from the light green zone, and I agree with that. I also find that when things get far from the light green zone, they are more prone to a mean reversion. Doesn't mean the end of the trend, but a mean reversion. So these are all things that I do consider. But let's just mention them now, and let's do more case studies and learn about them. So I think I got to all of those. Martin's got one, actually. I'm going to write an article about this, Martin. He asked about earnings season. Martin's short Xero. So I'll tell you what Martin's short. Now, they can only assume Martin got these from my scans, because obviously my... Go Martin. Go Martin. Now, everybody who owns Xero stock is just crying into their cornflakes this morning at breakfast time, aren't they? And yet you see such a visceral response that I've got, because right at that arrow is where I put it in ChartWatch ASIC scans as the downtrend, which, you know, ladies and gentlemen, you can interpret as minus R. And look, really dilly for me, the thing's halved in price, and hopefully Martin's going very well there. So Martin's on that. Martin's on Martin is short PME. It's just, I feel so good about this. Martin's short PME. Oh. I haven't seen these charts today, and I don't have a list, but you know, it's probably 30 times, and there's a featured downtrend in the last 3 or 4 months. And you also know that if you're looking at broker research, the vast majority of brokers have a buy on this stock, right? Because they fell in love with it. This one was minus R here for me. Martin's killing it. Martin's also short Wisetech. Martin's killing it. It's just goosebumps. But Martin was also short 360. Now, this allows me to make the most wonderful set of 2 points. The first point is the need for having a wide range of exposure to short side, long side. Anyway, diversification, I think, is what I meant to say. So if Martin had only shorted 360, and Martin said, look, you know, I got cleaned up in that one. You know, I was short, and I got cleaned up. And now that would depend when Martin shorted it. I mean, this is when I first put it in. So if I first put it on that day and then you got out on that day, you still did okay. Maybe Martin shorted it on another time. I don't know. But even then, like, you could have only got rid of a little bit there, Martin. So what I would say is that we don't have to be all in or all out. You know, my model is not that. So minus risk in terms of taking some of your short exposure off the table, and then actually looking pretty good now. So the point there is, well, he's nailed it in the other three. Does it really matter that he lost on one of them? That's my point. Okay, and I know a lot of you out there who are using ChartWatch scans, you buy one stock because Carl put it in his list, and then you come back a week later and you've got the only stock in the list that didn't go up. Is that fair to say? Like, you go, oh no, that's gone up, 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 and what's wrong with my one? Okay, well, you put all your eggs in that one basket, and the model works if you can spread that risk around. And how many? I say as many as you can fit in your portfolio risk bucket. So, first and foremost, get a bit of a spread. Secondly, if you've got that spread, it more often than not will work in your favour. The other point is about earnings. So this one was not just ebb and flow, because ebb and flow, it would have just kept going down. This was definitely a news event. Something changed. They upgraded their profit guidance, and we can see that didn't last very long anyway. So Martin's question was, look, what do I do? We're coming into earnings season. I'm just cleaning up on these shorts. Do I hold through the news? And my experience, Martin, the best thing I would do, I can't tell you what to do, but what I like to do is if I'm going that well, I'll take some off the table. I don't have to be all out, like I said. I like to move in thirds. Some people move in smaller amounts or bigger amounts, but it's very much just taking risk off the table if you get a signal against you. But in this case, mitigating the risk of a big move like 360, but maintaining at least some exposure, because the news tends to break in the direction of the trend. All right. The reason why there's a trend is because the big fund managers, they already know there's bad news coming. They know there's profit downgrades coming. Okay. That's why they're selling like crazy. And that's why they're not buying it anymore. So the bad news tends to come. But the caveat is sometimes that bad news marks the end of bad news. So we get short covering, and that's what you need to watch out for. IGO. This one is for Nick. And I might do, Nick, if you indulge me, a quick little tour de lithium. We haven't done one of those for a little while. Lithium's got some problems, okay? Or at least IGO does. I don't like this, and I don't like this. If you blend them together, you get something that is not ideal in terms of FOMO and HOFU being maintained, in terms of big fund managers standing ready and firm to buy the dip, because some of them no doubt are, but their supply is there to meet that buy the dip and potentially to overwhelm it. And when that buy the dip demand is overwhelmed, it's very hard to get it back, because they end up being washed out in the rally of the next phase. Not saying that's going to happen. All I'm saying is that I cannot, so not an option, exclamation mark, is FRP. So I can't be full risk position here based upon the fact that I have these candles. I have closed beneath the last point of demand. So these are just rules. How bad the candles are, that's a little bit discretionary. But hang around with me long enough and you'll know. You'll look at candles and you won't just look at one, you'll blend things together just visually, and you know, okay, that's a big supply side response. I need to do something about it. So this is a little bit of experience, but we can all see they're black, can we not? We're going to then start to combine things like, I don't like that volatility and I don't like the volume that's being associated with this move. So that's elevating those candles in importance. Plus we've closed beneath that we can all see, the last point of demand. And then we're starting to just flit around at the short-term uptrend ribbon, which so far is actually holding. In fact, that day we closed beneath it, didn't we? And that's a bit of a no-no as well. So my fear here is that this buy the dip, the demand has been weakened. It doesn't therefore have enough energy to blast back through that high and put us back into the phase of anything's possible. Potentially this becomes a defining, dare I say, cycle point of supply, and we move more into a distribution phase. I don't know that yet, but all I know is I cannot run a full risk position on this. Now, I still think it's warranted to have some risk on it, and we've used this idea of 1,000 shares, and I've probably already done a couple of batches of this, okay? But you say, Carl, why don't you just get all out? Well, because we've still got this and this. Okay, and unless I've got something else that really demands this capital, because that's also a consideration, I should give it a little bit of the benefit of the doubt. I'm saying a little bit now because this is where we are. And the final point for me, I would suggest is under that newly formed point of demand. If we get beneath that, because, ladies and gentlemen, is it fair to say this is the buy the dip, right? This is the buy the dip demand, right? These are the funds prepared, don't make me type it all out, prepared to stick their neck out and buy the dip. Now, if we end up, right, if we end up trading beneath where they took their stand, what does it mean about that demand in the system? As much as it means about the supply that's there to meet them, okay? And for that reason, I cannot possibly, based upon my model, still have any risk on IGO. But hey, if it goes up, I've still got some risk here, right? So just some of the psychology, some of the practical application in terms of managing risk. Ladies and gentlemen, can I remind you, we have these options in front of us. And guess what options we don't have in front of us is, but the fundamentals are good. Anyway, I have to be careful what I say. Some people get really upset when I say stuff like that. I don't care about the fundamentals. I just care about what the big money is doing, because they understand the fundamentals better than me. I'm going to be the last person to realise when the fundamentals have changed. So let's go to PLS, which I'm sure is another favourite. And I won't spend any more time on PLS, but to say that we are in a very similar situation to IGO. And I want nothing more than for this to go back up, and it probably won't go straight back up. It'll do something like this. It'll come back, test and hold, and it must do this, and then we're going to hit the point of supply, and then we're going to do something like this, all right? Because nothing goes up in a straight line. I must see demand reinforcement, okay? The demand that's here, this point of demand, right, the buy, the dip, right, the big funds taking that stand, they are going to get challenged by supply. We know there's supply in the system. How do you know there's supply in the system? You can see the supply in the system, ladies and gentlemen, right? Here, there's motivated supply. We cannot ignore it. These guys may well have enough to clear them out, but at some point they're going to get challenged. I want to see how they respond to that challenge. Do they completely melt down? Or do they absorb that supply and say, give me more? So this is the sort of stuff I need to see, and I'd love nothing more for it to happen. People think I hate lithium stocks for some reason. There are a lot of people who follow lithium, if you follow me on Twitter, you know this, who really don't like me, because for 3 years I called their lithium down, for 3 straight years. Okay, and then ironically, in about August, in fact it was August last year, I started to put in Pilbara Minerals, Mineral Resources, IGO as buys, and they just couldn't understand it. Like, they were just scratching their heads. I thought this guy hated lithium, and now he's just all buys on lithium. What they don't realise is I don't care about their narratives. I just care about the price action, the trends, and the candles. Now, I'd love this to go up, and these are the things we'll need to see. We'll need to see supply challenge demand, and demand beat supply. If this were to trade beneath here, and hopefully we can all see this clear as day now, but beneath there, Pilbara Minerals is in trouble town, and for me that's ZRP. We'll do 2 more. Mineral Resources, which is, so this is a real problem for me now. Okay, and hopefully I've taught you how to fish well enough now to know that this is a no-no. I can't do this. And today's candle, what it's doing is, there's your bounce, and this is what I was saying about dead cat bounce, right? You drop a cat from a large height. How high does it bounce? Not very high. And then the short-term trend ribbon, which was supporting it all the way up, what is it doing now? It's pushing it back down. So if I would say, there's minus risk, sure. But I would say if today's candle's not close, but if it closes looking like that or worse, so full black candle near the low or longer than it is now, I'm not waiting for ZRP on Min, I'm going to ZRP. Now, ladies and gentlemen, please understand, you can do whatever the hell you like with your money, because it's your money. I'm just telling you how my model works and what I would do with it. I didn't mean to go there, but that's a pretty good chart. And I said I'd do one more. What's the next one? LTR. It's got a line to, oof. Let's just stare at that for 10 seconds. And that's how complicated my model is, isn't it? Stare at a chart for 10 seconds. If I've taught you well enough, you should know what to do. Flight Centre, I think Nick's got. I know I don't normally do too. Oh, that's not good. I think maybe some news today, maybe some earnings. I don't know, but that's not a great candle. I'm seeing some really nasty candles on the ASX today, apart from Prospect Resources. Today's candle's not closed, but that in itself, for me, the severity of it, there's no volume though. Look, I can't comment on this candle. I have to comment on that one. And the problem is the one before it was fantastic. I'd been adding risk on that candle. Wouldn't have had a chance because today didn't give you the opportunity. But yesterday, this shows I don't know the future. Anything can happen next. But no, I think if that closes that bad or worse, I'd just do knock a little off the table. That's just me. That candle's enough in itself to get some risk off the table for me on that one. Okay, let's move quickly here. AZJ, this one's from Annette. Not terrible, of course. We've got some decent trends there, but under a little bit of pressure, I would suggest to you. Is this the exact chart I was showing you before, where there's a bit more overlap? Maybe I'm being a bit unfair to it, but there's far more overlap here than some of the other ones we've seen that are nice clean trends. So that would be a little bit of a put off just in itself. Again, we were shaping up pretty good, weren't we, overall? And then some of the recent events have pared us back. For me, you've got to understand I'm a shorter term trader. I'm not an investor. I could, if I squinted, go equals R. I don't like this move, but I could go equals R, but I'm more of a minus R, certainly beneath that level there, and I'll close beneath that last point of demand. We're not in good shape on Aurizon anymore. Okay, Wayne's got 4DX, which I'll do quickly because we've done it so many times, Wayne, and we've talked about various strategies to get out of this one. We also talked about the fact that on this candle here, we would have been ZRP. I can't see any other candle since then, certainly not that one, and certainly not that one. That would have me adding risk on this because I don't just buy on any white candle. And I'm so glad we had that discussion before about what I need to see. Okay, yes, there might be demand coming back in, but we know supply is entrenched in the system. We know there's latent supply from people who got caught on this run. They were buying at $5. Now they regret that. They want to get out as close. They won't take losses on this. There are some commentators out there that are so enamored with the fundamentals that they won't get out, and they'll hold it all the way back down to $1. But hey, offer them break even, that maybe they might change their mind. But we know there's supply entrenched. We know there's some demand coming in. Does demand pull this off? Does demand eat through that supply? And I don't have to wait for it to go all the way back up, but at least give me one higher trough above the short-term trend ribbon and a nice white candle in here. I might add some risk there. I won't add all the risk I intend to add because I've still got this to deal with, but that's where I'll take a nibble around here with a nice white candle. Okay, this is how you can plan out trades. You don't have to be in it today. Yeah, you can be interested in a stock. You can. I'm not telling you not to know the fundamentals, but you can know the fundamentals, but also say, well, I know technicals too now. And the fundamentals are good, but I'm not going to buy it until the market starts to agree the fundamentals are good again. And that's what I'm waiting for. That candle after that price action above the short-term trend ribbon, and then I'll go. And if I wait for that, I might have to buy it at 420, and that might be better than buying it at 360. But am I better off buying now at 360 with no indication that demand is really in control again, and risking it goes back to $1? I mean, I'd rather pay 60 cents and have that behind me, an extra 60 cents, than get a 60 cent discount and then risk this. Okay, so I can't see any reason not to be still ZRP on that one, and I've explained to you when I would start to move risk back in, to move away from ZRP in a positive direction. MPW for a turnaround. This one's from Simone, and Simone using my exact phraseology here, which is we're looking at this for a turnaround setup. Simone, you are a legend, because exactly, we've seen a lot of potential turnarounds from up to down, but this is a potential turnaround from down to up, and we need it to get above, obviously, the long-term trend ribbon. So the long-term trend ribbon is neutral, but at least we have this uptrend. So we're waiting for it to move. Probably the picture we want is more like that, Simone. I know that didn't last for very long, but still from about 360 coincidentally again to 480, there's potentially a decent trade there, like a worst case of break even. But this is more what we want to see. So here is the very fledgling starting to look like it again. This would be an aggressive entry. If you got in on this date, no objections. I can see why you would do it. But ideally, we just see that last little, and the technical term for it is a dink. ladies and gentlemen. You'll hear me use this term very often, but just if we can just get that extra dink to tell us that the long-term trend ribbon, and here's the dink here, to tell us that the long-term trend ribbon has gone from behaving as supply to potentially demand, that's what we want. Okay, we didn't dink out of it here, did we? We tried to dink and then it failed, and that's a big no-no there. So are we in more of this sort of a thing, or are we in more of this sort of thing? And I don't think we have enough evidence to suggest that if we sort of label this 1 and 2, I don't think we have enough evidence to comprehensively say we're more of a 1 than a 2. So a little bit cautious. What I need to see from here, let me get rid of all of that stuff. And it's the same stuff I've done many times today. Let me see something like this. And if I'm getting that nice big white candle in that area there, then I'm more likely to want to add risk to it. And it's a no for now, but it's not a no forever, is it? Nothing's a no forever. If the demand-supply dynamics change to show excess demand, I'll be all over it. Let's go to Rebecca. Thanks for your wisdom, Carl, or thank you for calling it wisdom, Rebecca. That's very kind of you, very generous. Can you please explain why you don't invest in a higher risk proportion during a confirmed downtrend, but only opening shorts? Okay, so I'm going to assume I know the answer, know what the question's about. Is the question about why I'm not buying in the downtrend, why I'm only going short? It's just about probabilities. If that's the question, basically, I say that when I start to have double pinks, right, there's a probability associated with the price continuing to go down. We have discussed this, so it won't take long. There's if we look at what might happen next, we've got 3 options: up, sideways, or down. And double pinks for me tell me that more often than not the price will keep going down. That's all I need to know. So that's why I can't buy it, because I want to buy things that go up. Why would I short it? For the same reason. If I see something like that and I believe, well, there's a 60% chance that it will keep going down, I want to take advantage of that. That doesn't mean that the day after I short it, it won't go up. It's possible, but I take my loss and I get on to the next one. Hopefully you can see that we talk about in the beginning, if you're watching the recording, you don't see the beginning, you need to come live, but we talk about the importance of being able to take losses. Hopefully you can see why that thing is at the start of every one of my presentations, because for me, trading is just probabilities. It's just probabilities. It's just events. Each trade is an event within a broad probability matrix, and I need to get to the next one and the next one and the next one. Because if I'm operating on a more often than not basis and I can win more on my winners than I lose on my losers, I have to make money in the long run. So you can see why I'm so keen to get to the next opportunity, the next event, the next event, the next event, the next event, and not to get stuck in any other event. Yeah, is it investing? I'm not sure if you would call what I do investing. Don't know, what would you call it? It's very systematic. Let's go to, I need my glasses. I think that says Yon. FMG. Got my glasses. You want to see what I look like with glasses, ladies and gentlemen? Here you go. Do I look any smarter? There we go. But now I can see that is definitely Yon. FMG. And we have some problems here on FMG. I'm going to take these off. Let's go here. This is the killer. Hopefully we can see straight away. I know this is Harry Hindsight. Sorry, I know this is Harry Hindsight looking at the market now. But you know the model, and you know that this is a minus R, certainly. And that's probably the first really big one. There's a few things in here that I don't like, but nothing that's so definitive that it would cause me to get out of risk. I think it's looking pretty good, literally until that candle. And then once we start to get confirmations where the short-term trend ribbon is behaving as supply, that's when we're going to more minus Rs. Look, today's not closed. This is encouraging. Like that and that is encouraging, but we're still beneath here. So for me, I'd be close to ZRP if I still had, if I out of the 1,000 shares sort of thing, order of magnitude, we're just using round numbers here, right? I would have gone, minus, 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 and I might order of magnitude have that latent 100 share position in at the most on Fortescue on the basis of that. But even then, that's a little bit contentious for me. Why don't you like Fortescue, Carl? It's got a great dividend yield. Sorry, Jon. It's just my model, and it's so important we make this point each week, because people come on board for the first time and they go, oh, I'm going to do everything Carl's going to do, but if it doesn't suit your trading style and your objectives and what you're trying to achieve, if you're far more longer term than me, well, this is highly transactional. This requires a lot of work, a lot of discipline, a lot of expertise even. And if you're just starting out and if you can't tick those boxes, you're going to get a very different result than, say, somebody who can tick those boxes is going to expect. Keep an eye on those lists. I do the work for you. Have a crack. Be disciplined. Manage your risk. Follow the trend. And I think you'll do well anyway. This one here is interesting in as much as we're starting to move in the right directions. We've gotten above that long-term trend ribbon. We've certainly had some really strong demand come in. We've seen interest spike through the roof. It's probably been all the chat rooms volatility as well. At some point, you're going to have some profit taking come in. That's inevitable. It's particularly these little ones. It's how they deal with it, how they come back. And we really don't want to see too big a decline, because it will set this as what the cycle high is, what people can expect now. On the way up, anything's possible, but now we kind of know what's possible, and it dulls the enthusiasm of the demand side, and it incentivizes the supply side to try and get as close to that as possible again. So I don't think there's much price action here or candles that really tell me that the initial euphoria is re-engaging at this stage. Doesn't mean it can't, but again, let me give you the dink. And if I start to see those higher peaks and higher troughs come in, because you can see I don't mind giving up a cent or 2 cents here to feel that those probabilities have shifted substantially in my favour. Okay, right now this is more of a sideways one for me, rather than more often than not going up, and I don't think necessarily down either. It's just probably more of a sideways. But this also shows that I'm happy to buy little things like this, because there are commentators out there, they'll only buy things that have profits or pay a dividend and all that sort of stuff. I couldn't care less. Is it going up? If it's going up, there's potentially an opportunity to make money there. From Christina NMG. Oh, whoa! What do we think, ladies and gentlemen? Thumbs up or surprise face, plus R's or minus R's? We're going to get some thumbs up on this one, no doubt. So I'm pretty happy with that one. Today's candle needs to close as it looks for me, and then I'm happy to go plus R here. Carl, hasn't that gone up too much? Maybe, I don't know. Okay, I don't know. All I know is that demand is very much in control. I like the fact we've had a little bit of a pullback. We've washed out some of that speculative supply, and the demand is coming back in. I'd love a little bit of volume here. We haven't seen it yet. Again, I'm commentating on a candle that's not closed. Tune in tomorrow morning, and this will either be in my feature or not in my feature, and I'll be able to give you that sort of definitive view from myself. But otherwise, it looks very, very strong. I mean, it just looks like a picture of demand side control, people wanting to be involved. Where's the top? I don't know. I'll find out after the fact. Okay, I'm going to do 3 more, and I might head down. I know there's a lot of people missing out. I apologise, but it's the nature of the beast. I'm going to head down to the bottom. Domino's was looking good for a turnaround play. I fear that the events of the last few days, more broadly on the market, has caused it, unfortunately, to come a little unstuck. And that's where it's for me as well. Look, I can see a path to having some risk on it, because we can see this movement here. This is why I'm never all out. But certainly with, this candle here looks like demand's coming in off the short-term trend ribbon, which is exactly where we would expect it to be. But the fact that the second candle wipes out that demand, remember we talked about how the buy, the dippers, the positional traders, the big fund managers looking to perpetuate that trend, they kind of got their fill there. They got a bit. There's no volume here though. It's just moving more to ho-hum than clear-cut get out, but it's also moving away from clear-cut stay in, and that's my fear. So it's more about making my money work as hard as possible and trying to find a better place for some of the risk that I would take off this. So I would be less than a full risk position on here, and that's all I say in it. Certainly if we were to trade, and it's not far away, even beneath this little, see this has a little buy the dip came in here as well, trading beneath that, then we're definitively below the short-term trend ribbon. 100% I would continue to reduce my risk there. And from a personal perspective, because I'm quite proactive, that would more than likely also mean ZRP for me, because that's not exactly shooting the lights out either, is it? Okay, so it was a shame because I thought this one could turn out to be a decent turnaround setup, but it's just looking a bit more sideways now than it was before. I've got 2 more to go. How do you set up the green and pink ribbons from Anne? That's a great question. I'll tell you how to get it and on your TradingView screen very soon. FRS from Jill, and then one more after this, and it's that one there, which still looks very solid. It looks like that NMG. In fact, I'd say this looks even better than NMG because it has a far shallower pullback, and that pullback is punctuated by fewer supply side candles, but it's almost identical in the fact that is a strong trend established, accelerating. The price action is very strong, and the candles are, I think, better also. So yes, obviously I can't see today's candle's not closed, but I'm still plus R on this one. POL Eve has got the last one there, which is that one. One of the silver stocks. So we're going to see volatility, aren't we? Because we saw volatility in silver. We're going to see probably something that was looking perfect, events out of its control. And I would point you towards that earlier analysis we did on Silver Eve, and I would say that as good as it looked and as good as silver looked, I think we've got some problems in silver now, and that might reflect poorly also on some of these silver stocks. Looking at this just by itself, you can see a gap here. So really forceful supply, no demand, like just an absence of demand, like nobody wanted to buy it here. Then it tried to rally on this day, and all it found was more supply. So, 165 to 125, in the past, pullbacks like that were treated as a buying opportunity. And then we look at this day here, and the pullback was not treated as a buying opportunity. It was treated, and the demand that did try and buy that dip was actually sold into, and that's concerning. That's backing it up, and today's not looking very good as well. So as much as, we find these things painful, frustrating, because yes, I would agree with you on that day, full risk position, happy to hold it all, and yet something has happened completely beyond our control to put us in a situation where potentially we've lost money. And ladies and gentlemen, welcome to trading. On that note, welcome to trading. Apologies, as always, for those who didn't get their question answered today, but there's always next week. Come back. Tune in for another installment. In the meantime, the trend ribbons, that's right. Well, I can supply them to you on TradingView. Now, I have no affiliation with TradingView. I don't get paid if you do anything with them. I honestly don't care, but it's just a nice little platform that I can put my ribbon on. I can lock the code down so you can't see what it does, and I can give you access. I'm happy to do that. All I need for you to do is to fill out the form in the description of the YouTube recording. Now, I know you're listening live, some of you, but some of you will be in the recording, or they'll know where to find it on YouTube. Go to the Market Index YouTube page, and there's a form in there. Click on the link and make sure you put in your email, your name, and most importantly, your TradingView username. Make sure you get that field right. People put all sorts of things like, oh, thank you, Carl. It's not username. I need your TradingView username. If you don't have a TradingView account, guess what? You won't have a username, so you need to go get one first. Now, if you are watching in the recording, make sure you hit the thumbs up button to let me know you love what I'm doing. I check those likes religiously. I want to know you like it. That's really rewarding for me, because that's all the reward I ask for, isn't it? At the end of the day, it's all very free here. Make sure you hit the subscribe button. That lets Market Index, you like what we're doing as well, and they'll facilitate me doing more of it. Apart from that, ladies and gentlemen, it has been an absolute pleasure chatting with you today. Hopefully you learned lots. As you can see, Mr. Buffett has mysteriously disappeared from my picture frame this week, and it's been replaced by the regular, if in doubt, keep calm and follow the trends. Until we catch up again, bye-bye for now.